Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about retail and retail real estate. Please welcome my next guest. It's Frank Meyrath. He is with the National Retail Group at Bull Realty, and he sells shopping centers and retail properties around the Southeast U.S. Frank, thanks for joining us today.
Thanks, Michael, for having me on the show.
Well, we appreciate it. So you're on the ground level here. You're talking to buyers and sellers every day. What's the market really like?
Well, it's very active. On the institutional side, we and as well as cross-border capital, we continue to see large assets being traded, large portfolios. Blackstone, which is of course always very active, it seems, they just acquired a large retail portfolio from Prologis, which in turn had just recently acquired it as part of a larger group. So we continue to see that. On the private capital side, with the more retail investors, we are continuing to see it very active. It'll be interesting going forward as we've seen the low cap rates on the single tenant properties, if some of those investors migrate over to the multi-tenant space as they look for ways to increase their returns.
Okay, so what is active? What are buyers looking for today?
Well, aside from things with the stability of cash flow, which is obviously a big portion of it, a lot of people are looking for that what we call value add, but the definition of value add has really changed a lot over the last few years. A few years ago, when you see value add, it might be a total restructuring of the property, whether it's complete lease up or a complete change in the capital mix. Now it's much more subtle. Where can you add value? Can you enhance the rents? Can you re-tenant to improve the mix? And where can you drive value?
Right, and I guess investors are really searching for yield, and we hear that the sexy six markets are always hot with the investors. But are you seeing more activity in the secondary and tertiary markets?
Yeah, throughout the Southeast is where I primarily conduct my practice, and we see a lot of capital coming from the north and from the west, as well as from overseas, as they look to chase yield and look for opportunities that may not be present in some of those other local markets, just because the cap rates have been driven down so low. In the Southeast, areas like Atlanta, where we're located, Charlotte, Nashville have been some of the hottest markets, as well as like the Raleigh-Durham area, just because there's a lot of room for economic growth and economic growth happening. In the Florida markets, you have Orlando and Tampa. They're going to trade similar to the rest of the Southeast. Obviously, the South Florida and Miami markets are much more of a gateway with overseas capital and would trade at the lowest cap rate range.
Yeah. Well, speaking of cap rates, give us an example of, say, a nice core institutional property that's in one of those gateway markets. What cap rate would that difference would you see for that same property maybe selling in Nashville or Atlanta?
Sure. Well, for the absolute core properties, it's probably not going to be as much of a premium because you're going to have the same institutional players buying it, and you're going to also see it sometimes trade as part of a portfolio. But generally, for the larger institutional plays, it's going to be more in the low 5s to 6 cap rate range. Whereas on the private capital side, we're going to have more diverse buyer base. It's going to be in the 6.5 to 7.5 cap range, all things being equal. And as far as in premium, generally between 50 and 100 basis points premium compared to some of the gateway markets.
Yeah. And what are your investors telling you about the future? How do they feel about retail when it comes to omni-channel marketing, online marketing, kind of the some people say retail's overbuilt. What are your investors telling you? They seem to have a appetite, right?
Yeah, and certainly there's an appetite. Obviously, as the old saying goes, retail follows rooftop. So as we see more growth, both in-town markets throughout the Southeast and the country, we see redevelopment and we see more retail coming in. And some of those is going to be repositioning retail. We've seen big boxes get divvied up into two spaces, for example, with the office supply stores, some of the spaces that they consolidate and bring it down. And this is an opportunity for investors. They're looking to reposition these, to bring in new retail concepts into the market and potentially increase the rents of the centers.
It's a great time to sell, isn't it?
It is. The biggest tip that I would give anybody is for not only think about the real estate cycle, but where their cycle are in terms of their own.
Yeah, our time's up. Well, Frank, thank you. And be sure and join us next week. We're going to talk about the multifamily market. So until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. RealNex, software for productivity. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.